overall activity about, how is this new global economy, so not the regional economies of Ethereum versus Solana, but the global economy doing, total value that's happening on this? Because, that's something I think we don't step back enough, and I try and do that as much as possible, just to say, how we doing? And I've talked about it with a number of wallets. Super interesting to know what the total activity in all of crypto is. That's amazing growth. And, if you listen to what Scott Bessent says, he's like, well, we think we can have a $3 trillion stablecoin market. That's just in the underlying value held, not in the transactions that executed on that. And you can see how this is just going to go to warp factor 10 in terms of, exponentiality of all of this stuff.
Hey guys, welcome to Everyday Finance. Almost every crypto bull run follows the same pattern. Bitcoin is first to go, and then altcoins catch fire. This happened in 2017 when Bitcoin went up to $20,000. It caused huge price increases in Ethereum and other smaller tokens. The same thing happened in 2021. Bitcoin hit $69,000. Solana went from $2 to over $250. An avalanche went from $3 to $146 as DeFi and NFTs grew very quickly. Things seem to be going the same way again in 2025. Since the lows of last year, Bitcoin has been slowly going up, and altcoins are also showing strong progress. The altcoin season index recently hit 79, which is the highest level it has been since late 2021. This shows that a lot of money is moving from Bitcoin to the market as a whole. The value of all altcoins has grown to $1.74 trillion, and some are getting close to new all-time highs. That's where Raoul Pal from Real Vision and Jamie Coutts, who is the top crypto analyst at the company, come in. They look at more than just price changes. To tell the difference between hype and real market leaders, they look at on-chain activity, transaction numbers, and real economic use. Make sure to like, join, and stay tuned before we go any further. This talk could help you find the next big winners in the 2025 crypto bull market.
And the other one I've looked at is, I keep an eye on that crypto.com number of active wallets metric, which is now at 900 million.
Oh, shit,
is it 900 million?
I think it
was 800 million, whatever, right? It was 600 last year. Now it's like, fuck, we're going to get to 1 billion by Q1 of next year. And the way to think about it, people just argue about this all day. I'm like, stop thinking it's not 1 billion users. We understand that. But how many bank accounts do you have? And sub accounts, you got your household checking account, you're saving, or IP addresses. It's that. It just shows you the speed this is growing. And when I looked at it, there are more. There's now twice as many of those. Let's assume the number of active users is, we don't know, 500 million, whatever the number is, pick your number. It's more than all of the traditional brokerage accounts added together in all traditional markets. That's what I've got to is like, there's more active people in this because of the young cohort and all the foreigners and everybody else, because it's a global access to globalized products than exist elsewhere in all of markets.
Yeah, when I did those settlement volumes, it was because I just got the data that I've been looking for a while. I remember I was speaking to you maybe like 6 months ago. You're like, I can't believe we can't get this data. And suddenly I got it. So I dug into it and I was just sitting there going, holy shit, it is matched. This tiny little asset class is matching Visa's total transaction volumes of the last 5 years.
I know.
But it's growing at 90% and Visa's growing at 8%. So where is it going to be in 5 years' time?
So it looks like if this is the most updated one, we'll get to 942 million wallets by the end of this year.
Right.
By the end of 2025.
I think, I remember even like the projections for 1 billion being sort of 2027, 2028. So yeah, we're growing faster than, is that right? But I remember you saying maybe like 3 years ago, it would be like 2027, 2028, we'll get to 1 billion, but we're here. That's where we nearly are.
We seem to be going faster than the projection, because we were projecting about a 43% annual growth, but it looks like at this stage, but it looks like it's still growing faster than that. So it's still growing faster than the internet was at this stage, which is an extraordinary thing.
Yeah. It makes sense. Like, it's built on top of a exponential network, so it should move faster. And that's with every single headwind and every hostile regulator and national government working against it for really the last couple of years. So it's pretty phenomenal.
Yeah. And do you look at overall activity about, how is this new global economy, so not the regional economies of Ethereum versus Solana, but the global economy doing, total value that's happening on this? Because, that's something I think we don't step back enough, and I try and do that as much as possible, just to say, how we doing? And I've talked about it with the number of wallets. Super interesting to know what the total activity in all of crypto is.
Yeah, I do. So I've got I don't know if we want to share this, but I've got dashboards here which sort of aggregate smart contract platform activity. And one of those earlier tables was settlement value. So that's one aspect to it. But looking at total TVLs, total stablecoin transfers, how much value is being bridged, into the ecosystem or between networks, everything. So I do look at that stuff.
And I wonder what total daily value is. Like, we look at FX markets and we kind of know it does like $1 trillion a day, whatever the number is, a couple of trillion a day. I wonder what we totally do across all of crypto, Bitcoin, smart contracts, the whole lot.
Yeah. So it's around 70 billion in terms of settlement value on chain a day at the moment. That's taking the last 30 days median, right, or 30-day average, right? Because it's extremely volatile. So it's around sort of 70 based on the numbers that I was just working with for this report. Okay.
70 billion in settlement value versus kind of call it 4 trillion in total value, right?
Yes, that's right. Let me give you another number. So on the cumulative on-chain settlement volume for the last 5 years is $57 trillion. Smart contract platforms, that excludes Bitcoin.
And what's Bitcoin done, do we think, on top?
I can't remember. I haven't really looked at it for a while, but it's probably
the same again, roughly, maybe?
Yeah. I don't know. I'd be speculating. Maybe half, I think.
Okay.
But if you compare, so Visa did around 70 trillion over that time. So that's the dominant payment network. It's like a layer 3 on the financial system. So you've obviously got bigger networks like Swift and Fedwire, which is colossal. But in terms of like trying to give it some sort of comparison, it's really slightly shy of what Visa's done over the same period of time, but it started at essentially zero.
Yeah. That's amazing growth. And, if you listen to what Scott Bessent says, he's like, well, we think we can have a $3 trillion stablecoin market. That's just in the underlying value held, not in the transactions that executed on that. And you can see how this is just going to go to warp factor 10 in terms of, exponentiality of all of this stuff.
Coutts makes a good point. Making money isn't the only way to judge how successful a blockchain is. A blockchain can't be judged by the fees it earns alone, just like an economy can't be judged by the taxes it receives, settlement value, or the total amount of money moving through the network. And the number of apps that are built on it are what really matter. So, Pal and Coutts stress a multi-factor method that looks at fees, active users, application growth, and settlement volumes. All of these show which networks are really making digital economies last. For example, Ethereum's recent scaling upgrades showed that while fees went down, total activity went through the roof. This is similar to how deregulation drives growth in other areas. From this point of view, investors can see which blockchains are becoming important tools, and which may be falling behind as capital starts to flow again.
And you and I have kicked this around for a long time, is I don't believe that revenue accrued to the chain itself is the key metric. And it confuses people. How are you thinking about this now?
It is an important metric because it shores up the security of the chain. But at the same time, the trend is lower transaction costs. So if you look at revenue as a share of settlement value, that is going to continue to decline. I think it's an important thing to understand, but there's probably better ways to synthesize fees as in more of a relative valuation metric, like fees relative to some other aspect that defines value on the chain. That's probably more relevant than just looking at it as in a gross or a sort of a nominal basis. I've started to really dig into a little bit more around some of the valuation frameworks, and you were like one of the guys who came out early with sort of the Metcalfe's law framework, which was modeled on settlement values and daily active addresses. And no doubt that there's that just models price. A lot of the things though in crypto model price because, the metrics that we use are the dollar-based metric or defined in the price of the actual token. So if the token increases, so does that metric. And it's very hard to disentangle how much of it leads one another or what leads. So it's the ongoing issue with crypto in that, how do you value these? Where is the predictive value in all these on-chain metrics? And I think this jury's still out. But if you look at things like settlement values, right? Which is part of your Metcalfe's law framework. That doesn't get talked about enough, which is how much value is actually moving across these networks. How much of it is stablecoin orientated? How much of it is just peer-to-peer transfers?
Because if not, you're kind of measuring the activity of the economy based on the fees that the banks make, or something, or the telco providers. Right. And that doesn't make sense, right? Because on top of the telco infrastructure or the internet infrastructure is all of the value that comes on top. And if you don't capture that, then you're not capturing the actual value of the network itself and what you can use it for.
Absolutely. It's a multifaceted approach. So if you just look at fees, or if you just look at users, you're missing a lot. If you just look at one of these metrics, they're not telling the whole story. And they're also pretty much at every metric can be gamed. Yeah. That's also the problem. So you need to have a multi-factor approach when looking at this. So I look at
the hardest one to game for an extended period is settlement, because that costs you a fortune. You can game wallet addresses, you can game active wallets, you can game all of that, but it's really hard to game total value transacted or total value settled.
Yeah, because you're paying a fee on that. Like someone's paying the fee. Now, there is still scope for some fuckery around that as well within chains.
Because there is in all of crypto, there's general fuckery is what you need to assume at all times.
You do, yeah. So you have to look at all these metrics with some degree of skepticism, but if you can build up a patchwork of them to tell, is this network expanding? So you mentioned layers, which is a critical element. So you've got the fees, which is maybe if in isolation, just an expression of rent seeking, right? But if the number of applications on top of that network are expanding, and the number of interactions between those applications expressed through diversity of transactions, so borrow, lend, dexes, perps, social applications, and then the settlement value, you get a much more complete picture of, okay, fees are growing, but as a percentage of the overall value, that might be declining, which means that this chain is essentially becoming more efficient. And the tax or the toll to operate in that network or in that economy is declining as a percentage of the overall GDP. And so
that's another way of thinking at it, because you and I have talked about these as economies and we're looking at GDP, and tax take is not necessarily the best measure of economic activity.
No,
it's kind of another way. And you might say the fees are the taxes, as you said, to operate within the economy, but that's not necessarily the full value that the economy transacts.
Yeah, like if you compare it to a country, right? So if it's just, if there are no other alternative countries to go to, then that country has got monopolistic sort of pricing power and will overcharge for services to a point where people start to get fed up and move elsewhere. And that kind of happened in 2020 and 2021. So yeah, and Ethereum knows this, and Ethereum's going through its scaling mission. And that's why you can see that, it's performed very well this year in terms of most metrics. Fees have been strong, but like fees have actually been declining because they're making those strides to make costs in the Ethereum ecosystem cheaper.
So that's kind of like a government deregulating the economy, freeing it up, charging lower taxes, creating a better free market economy. Because before Ethereum, to your point, back in 2021, with the economic activity that was going there, was too expensive. It was the California of the crypto economy, and everyone's like, "Yeah, we love it here. It's amazing, but I can't afford to live here any longer."
Yeah, we don't like the policy, so we're going to move.
The newest data from Jamie Coutts makes it clear value is moving into the top layer 1 blockchains, which makes it harder for smaller projects to stick out. Even though it doesn't have a lot of different apps, Ethereum is still the clear winner, moving around $28 billion every day. However, Tron is the big surprise, moving over $24 billion every day. At the same time, both Solana and Sui are moving quickly forward. Sui settlement growth this year is similar to Solana's meteoric rise in the last cycle. Coutts also talks about a new trend as Sui's DeFi ecosystem grows. More Bitcoin settlements and stablecoin trades are happening on it. Hyperliquid, which used to be just a derivatives platform but has grown quickly into a community with over 40 apps in just 1 year, making it one of the biggest chains in the world. It is still new and not fully included in on-chain numbers, but its growth curve looks a lot like Solana's early one. Coutts thinks that both Sui and Hyperliquid have a good chance of becoming long-lasting leaders in the digital economy. The message is clear. Not all altcoins will make it through the bull market. In the coming years, the winners will be those with growing settlement amounts, strong ecosystems, and real user adoption. For investors, this means ignoring short-term price jumps and focusing on what's important in the long run. How about you? Which layer 1 do you think will be in charge of this cycle? Do you want Hyperliquid Ethereum, Solana, or Sui? Leave a comment below, click like, and join to get more in-depth crypto news.